Caption Close. The City of Houston completed the sale of $1 billion in voter-approved pension bonds Friday in New York and began delivering the proceeds to its police and municipal pension funds, cementing the pension reform package that has dominated Mayor Sylvester Turner's first 2 years in office. A state district judge ruled Thursday the transaction could proceed despite a last-minute legal challenge to the November 7 election from a conservative critic of the deal who had said he wouldn't mind unraveling the reform package, which he views as an inadequate solution. If the city had not delivered $750 million to its police fund and $250 million to its municipal fund by this spring, much of the $2.8 billion in benefit cuts at the heart of the reforms would have been rescinded. Today is an exciting day for the financial future of our city, said City Controller Chris Brown. With today's issuance, the city upholds its promises to its pension systems and residents, and drastically improves its financial trajectory. Houston residents can rest easier today knowing that meaningful pension reform is finally in place. Plaintiff and former City Housing Director James Noteware has alleged the ballot language underpinning the November referendum was materially misleading. A phrase in the ballot language that did not appear on the ballot itself, in Noteware's view, would allow the city to sidestep a 13-year-old, voter-approved limit on city property tax collections in repaying the bonds. Gerard Navarre, Noteware's attorney, had said it would be the height of irresponsibility for the city to issue bonds in connection with an election that could wind up being voided. John Lawson, executive director of the Houston Police Officers Pension System, confirmed his organization had received its promised funds by wire transfer Friday morning. Officials from the Houston Municipal Employees Pension System and the mayor's office could not immediately be reached for comment. Filings with the Municipal Securities Rulemaking Board showed the bond sale closed Friday, with the $1 billion split into 16 tranches of varying maturities. The interest rates on those tranches ranged between 2.2% and 4.1%. Brown, the city controller, said the city's overall interest rate for the issuance tallied just under 3.97%, which he said was notably lower than anticipated and represents significant cost savings, and demonstrates investor confidence in this plan's impact on the city of Houston's bottom line.